Good afternoon, everybody, and warm greetings from Sunshine Holdings. I'm Hiran Samarasinghe, Head of Investor Relations for Sunshine, and it's my pleasure to welcome all of you for the fourth quarter results webinar for Sunshine Holdings PLC. First, I would like to go through some housekeeping announcements. I will obviously keep everybody on mute during the presentation and later open it up for Q&A. Alternatively, you can also send in your questions through the chat platform. And also, just to let you know that we will be recording this webinar and putting it up on our investor relations page in our group website for future reference. Moving on, I would like to introduce my colleagues who will be joining us from this end. First of all, Mr. Vish Govindasamy, Group Managing Director, who is joining from home. It is designated work from home day. Here at the Kolpiti office, we have Mr. Shyam Sathasivam, who is the Managing Director for Healthcare, Consumer and the Renewable Energy sectors. And also Mr. Aruna Deeptikumar, who is the Group CFO. During the course of this webinar, we would like to cover a few key areas. First and foremost will be the recent restructure we completed on the group and the consumer and agri sector. Then moving on to the summary of results, followed by COVID update, and then moving on to Q&A. So without further ado, I would like to invite Vish to take you all through the restructure. So over to you, Vish.
Thank you. Good afternoon, ladies and gentlemen. Appreciate your time to join with us for this year-end and quarterly update. So on the group restructure, I'm assuming you're seeing the presentation online. As you know, we started this restructure process somewhere way back in 2017. I wouldn't go back all the way there because you all have all been privy to the decisions that has been taken up to March 2019 sale of 51% sale of the Hatton Plantation stake. Thereafter, out of the 74% remaining stake was there, which was part of the buyout agreement by the buyer of HPL, which happened in November 2019. With that, our holding company, Estate Management Services, was left with Wattawala Plantations and Wattawala Tea Ceylon, which was then owned by a 60-40 partnership by Pyramid Wilmar and Sunshine Holdings. So the remaining restructure was basically to transfer out the Wattawala shares that was held by Estate Management Services into a new JV, which was formed with a 50-50 partnership between Pyramid Wilmar and Sunshine Holdings. Thereafter, what was left behind in Estate Management Services was Wattawala Tea Ceylon, which also had the 60-40 partnership between Pyramid Wilmar and Sunshine Holdings. So the last part was to purchase that 40% share from Pyramid Wilmar, which made our consumer business, which is named Wattawala Tea Ceylon, 100% subsidiary of Sunshine Holdings. So before all this restructure, if you take a look at the diagram, you will see that Sunshine and Pyramid Wilmar with a 60-40 ownership held Estate Management Services, and Estate Management Services held 100% of WTCL and 74.24% of Watta. So this was the original structure based on after everything is done. The most important thing that happened here is now Sunshine Holdings owns 100% of our consumer business, which is Wattawala Tea Ceylon, which has the three popular brands, Zesta, Wattawala Tea, and Run Kahata, as you all very well know. Also, the new holding company, which is SWPL, or it's Sunshine Wilma Private Limited, which owns the 74% stake of the listed company, Watervilla Plantation. So with this, the entire restructure is complete. I'm sure you'll have understood this. I'd be happy to take questions during the Q&A. Thank you.
Thank you, Vish. And now moving on to the group results. I would like to invite Aruna to take on and carry you through the group results.
Yeah, thank you, Hiran. Good afternoon, everyone. Let me take you through the group financials. And the first slide, actually, we have excluded the financials of Upcountry Tea business, which was divested early stage of the financial year. From our existing businesses, we have reported 20.3 billion revenue, which is approximately 9% growth year on year, and also a profit after tax of 1.6 billion during the year. So if you look at the diagram, their healthcare business contributed more than 50% of the group revenue, followed by the consumer business, which was 27% contribution. And also agribusiness contributed 8% year-on-year growth. Moving on to the next slide, group financial highlights as per the quarterly publication. You all have already looked at it from the CSE website. Group revenue reported 20.8 billion and profit after tax of 1.8 billion for the financial year 2020. And also we have, after adjusting one-off items like such as Hatton Plantation disposal and also fair value gain, group reported 1.3 billion profit after tax. Moving on to the next slide, you can see the revenue and the profitability growth trend, and 5% CAGR in terms of revenue, and also the profitability trend from the next slide. And also I want to emphasize here, the group has given more focus on the cash management in the current challenging environment, and also adequate cash and bank facilities available with the group and the subsidiary companies to run the business effectively. So let me hand over the sessions to Hiran.
Thanks, Aruna, for that. And moving on to our segments, to add a bit of color on the healthcare sector, consumer sector, I would like to hand over to Shyam.
Thanks, Hiran. Good evening, everyone. So on the healthcare business sector, we had excellent results for the quarter as well as the financial year. You're looking at a nearly 20% growth for the year. We crossed into 11 billion for the year. Our healthcare sector, of course, is a combination of three businesses: Sunshine Pharmaceuticals, Sunshine Medical Devices, and HealthCard Pharmacy. All three businesses had significant growth through the year. Of course, impacts, etc., which we all felt at the first quarter and a little bit towards the tail end in March. But primarily a very good performance in terms of EBIT margin growth as well as PAT growth for the sector. The retail business per se had a good year from a context of recovering from the Easter incident. Of course, that was quite challenging for us in the days preceding into the quarter. We had a good second and third quarter, were running quite well for the fourth quarter, but of course impacted with physical closure of stores from mid-March onwards. But through the year, big highlights were we were able to generate significant growth in our wellness products. We saw good movement in terms of our own sort of franchisee products from GNC, as well as operational efficiencies, which helped the bottom line of this business. So that's the healthcare sector. Moving on to the consumer sector. The consumer sector, which is primarily for us the branded tea, which is Zesta, Watervilla Tea, and Rankahatta, We're the market leaders and have been for the last 2 to 3 years. We've continued to build both volume and value market share. Of course, the year was impacted by price cuts. Here was a category, the tea category had significant competition through the year, and significant price cuts led by the lead competitor meant that the revenue came in lower than the year before. And this, of course, had a cascading impact into EBIT and PAT, which this was coming off very high sort of consumer prices the year before. In that context, this correction has continued to happen in the sector, and we continue to build, though, in terms of market share. There is impact because of COVID, and we'll get into that further later on, but some impact in the Q4, definitely. I'll ask our Group MD to take the agri sector.
Thanks, Shyam. Agri, as you guys would know, basically it is a palm oil operation down in Gaul and a dairy farm. So palm oil had a reasonable quarter up until, of course, the COVID hit. So the last 10 days was really disrupted because those 10 days we couldn't get workforces to come in. So that's the reason for the overall reduction in revenue during the quarter. But for the year, we seem to have done really well one in our revenue, and also our production increased. As for dairy, we of course had issues at the end of the quarter and also during the year, where we had difficulty in sourcing adequate feed because the maize had various issues in growing, weather, etc. Otherwise, the milk yields were stable, and also the price was reasonably stable. So now we have about 1,460 animals, out of which 800 are milking. Both April and May saw continued increase in price of milk, and slowly the feed issue is getting stabilized. So that's in a nutshell what has happened in agri, and we see a good market coming for palm oil and milk, even with this COVID issue going forward.
So let me take you through the renewable energy sector. So here Sunshine is in two separate divisions. One is hydropower, is what we started off with. We have about 6.6 megawatts in hydropower in upcountry with 3 plants. The third plant commissioned during the financial year, so we are seeing an uptick in revenue from the third plant coming on stream. At the same time, we are also in solar, primarily with rooftop solar. We're doing a few projects, and that's also scaling quite well. For the year per se, a bit of dip coming in revenue because of some repairs, etc., that happened in the hydro, as well as some weather-related issues. But broadly, what we are seeing is a good turnaround in the Q4 as weather has improved, and we're getting much more productivity. So this sort of wraps up the sectoral feedback of Q4 and the annual results. What we thought we'd give you is an update on the COVID impact to each of our businesses, and then take questions thereafter. Right? So let me just start with the healthcare sector in terms of what the impact has been. Of course, with the immediate shutdown in mid-March, what we've first got hit was the ability to move product. Sunshine Pharmaceuticals supplies to more than 2,000 plus pharmacies across the country. And primarily coming out of Colombo, going into all the districts, and we have company-owned distribution centers across the country. So this got restricted, and the pharmacies being physically closed, and consumers and patients not coming into pharmacies. So this had some impact, but we were able to quickly get our curfew passes, etc., and get in with hit the ground running towards the last week of March into April. So that was a recovery. The currency depreciation at the time, it has since clawed back, but that was a concern. But it's stabilizing now. And of course, in terms of key essential products with supply chain disruption, so we did a few things like get in air freight in a few products like insulin, etc., to ensure we had stocks available. That is all pretty much in the business to business end of it at the medical devices and pharmaceutical side. In the healthcare retail chain, much more visible because of all the stores being pretty closed for most of those 2 weeks into March. And it took a while, I think, in engaging with both the health ministry and all other, police, Ministry of Defense, etc., to get clearances to open pharmacies. We continuously worked with the health ministry to have sort of limited opening hours for pharmacies, and this sort of brought some online, some sales. Of course, the online platform, I think we had 1,000+ sort of growth overnight in terms of the business. Quite challenging in terms of the scale at which we had to grow that, and I think that was a significant challenge in terms of being able to switch from a brick and mortar sort of model to be able to do deliveries, etc. But it's significant growth, and we'll have to watch and see what we do to invest in that area. The consumer business here was impacted primarily with the general trade being shut down for whatever the tea. We do about 75% of our business in general trade, about 25% through the modern trade. So general trade is a large buyer of product. The lockdown pretty much shut down general trade. Modern trade was procuring some, but again, with them being not open and only primarily trying to do online, there was impact as well. We also had manufacturing challenges because we work about providing fresh product, and that's been the USP for the company. So that was a challenge with manufacturing of product to get it into modern trade into April, etc. But we also see consumer affordability being challenged primarily in Q2 per se. So we've got to wait and watch to see what happens. So this is just to give you a short-term sort of context of what's happened since mid-March, pretty much into mid-May, in both the healthcare and the consumer business.
Thanks, Shyam. So let's move on to Q&A. We have a few questions from Naveen. The market share for the pharma distribution business. What are the supply disruptions in getting the pharma products in April? I think which Shyam covered. How many more cows can you add to the current dairy farm? And how much of tea sales are via the general trade now? So I think 2 and 4, I think we've covered. Shyam, do you want to pick one?
Sure. So market share in pharma, we are the number 2 player behind Hemas. I think we're at about 12 to 13% market share.
Vish, do you want to take number 4? Sorry,
Yeah.
number 3.
Yeah.
How many cows?
Yeah, thanks, Hiran. The answer will be around 250 cows additional we can take with the current infrastructure. But we have additional land that if we need to improve infrastructure, then that's a different number. But with the current infrastructure that is already been built, we can take up to additional 250.
Thanks, Vish. Moving on to the next one, I think from Rashid. What is the same-store sales growth for HealthGuard from January to March?
So same-store health was in the double digits, primarily, I think, led both by some volume growth, but a lot more price growth, as a lot of pharma companies took price corrections in Q2, Q3 because of the devaluation before that. So we were running at double-digit same-store growth pre-COVID.
Okay. Another one from Rashid. Actually, on HealthGuard online platform, what's the basket value?
So basket values have been significantly higher online. And of course, we sort of split our online between in the early days. The WhatsApp portal was what we did for prescriptions, and we continue to do our website primarily for wellness or non-prescription products. And we were not doing any prescription products before COVID. We had focused only on the wellness. So we were skewed by a higher basket value from wellness purchases.
Thanks. We have one on consumer from Ruchi. Has your distribution for modern and general trade recovered post-curfew?
It is on its way recovering. I think the general trade is not fully open yet. Typically, our product is available in 90,000 plus stores, of which we reach about 55,000 or so directly. We are right now probably only getting to about 35,000 stores directly. So I think it's on its way. It's recovering. We expect month of June for us to be at very close to where we were pre-COVID, but there's also impact in terms of productivity, in terms of their affordability to buy product, etc. So not everything has recovered.
Yeah, a few more questions on consumer, Sham. How much did you reduce prices by in your retail tea business, and how much did competition reduce prices by?
So broadly, the price cuts were around the lines of 12 to 15%, and that was in line with what the competitors reduced. So what we maintain primarily is a sort of a premium to particular competitor brands, and also intra R3 brands, a sort of a premium among each other. So the whole price table for the industry, when the top two players sort of reduce prices, the price table, I think, contracted by about 12 to 15%.
And what is the market share as it stands currently?
So Nielsen market share for Watermelon Tea Ceylon is around 37 to 38%. This doesn't include modern trade. And we believe with modern trade, we are upwards of 40+% market share and the market leader.
Thanks, Sham. We have another one from Nishara. With regard to milk output, is there any plans to start Sunshine's own FMCG brand? Is Sunshine focusing on just supplying milk? Vish,
I'll take that. I'll take that, Hiran.
Okay.
Of the early part of the first quarter, we were just trialing out a very in a very small way, that is farm to home fresh milk delivery, just to test out if there was appetite from the consumer. Of course, we couldn't complete that test because of the COVID issue. But as of right now, we don't have any plans on board to go for a consumer brand from the milk, because I mean, it involves various infrastructure requirements, etc. So right now we are concentrating on making sure we improve our milk yields and become a good milk producer who can supply to the bottlers or packers.
Thanks, Vish. We have another one from Naveen. What's your long-term plan for the FMCG business?
So I think firstly, as GMB mentioned in his presentation on structure, we have taken 100% share of our current business. And what we would like to do, I think, is scale our consumer business. Healthcare and consumer totally more than 80% of Sunshine Holdings revenue contribution. And we think there's significant room for growth in the consumer business.
Thanks, Sham. And follow-up question from Rashid, the market share for Unilever?
So Unilever market share is between 28 to 29%, just shy of 30%.
We have one from Sean. What is the current market share of revenue for HealthGuard retail?
So we don't break up specifically in terms of our healthcare sector, but broadly, we're looking at around 10% or so of the healthcare revenue, sector revenue would be from retail.
On the dairy, Sean, I think the results are there on the Vata side, so we'll skip that. I think there's a question on liquidity. I think it's more towards the brokers and not to the management. So I'll just move on. Is there any more questions relating to the businesses which you want to the management to address? We have one from Rashid, again on consumer. Is in which year was Unilever the market leader in the tea segment? And what was the market share of Unilever then?
I think we'll have to get back to you on that, Rashid. So Hiran will probably get the exact. It's a couple of years ago, about 3 to 4 years ago, from a Nielsen data, from what we felt from and the market share was. But I think we'll come back to you.
Yeah,
right? So broadly, if you look at our overall consumer story, is when we started the business, 98 or so, we were, Unilever was the market leader with about 60-70% market share. So over the years, we've built a business in one particular category, which has scaled. Both the category has grown, but we have scaled, exponentially to become the market leader in this category. But also at the same time, significant amount of sort of non-label products, has moved from that was sold in the general trade, unbranded has moved to the branded. So that's where most of our growth has come from Tea Ceylon, has been conversion of from the unbranded to branded tea.
Okay. We have one from Sean, 3 weeks post-lockdown. What kind of recovery have you seen on the retail side? What proportion of sales are you currently seeing compared to pre-lockdown?
So break it up into two parts. So from the healthcare retail side, both healthcare as well as pharmacies that we interact with from our Sunshine Pharmaceuticals end, we are seeing recoveries to about 75-80%. We're seeing that in terms of what we've seen in very early days. We're talking about 2 to 3 weeks. Product is available. There has been distribution through the lockdown because it was an essential product. So in that context, availability was high just at the point of opening. So we're seeing about 80% or so there, and upwards in certain areas. On the tea end of the business, I think that's where probably overall general trade has been slower. Modern trade has been faster to recover, but general trade has been probably slower to recover. So we anticipate, it will be at 65% or so recovery. We would think at general trade at this point.
Okay. We have a follow-up question from Rashid on the tea business. Is it correct to say that the driver in market share of Sunshine has been the Run Carter brand?
So Run Carter has been quite successful in the last couple of years, but our number one product is Whatever Latte. That is the largest market share brand in the country. So that's our market leading product. We have Zesta, which is a premium BOPF product, and over the years, we have since we've launched Run Carter as a brand that should further entice unbranded customers into the branded territory with consistency and quality. Run Carter has had very good growth and has been driving market share increase for us.
Yes. We have one from Ruchi. Why did competition undertake price cuts over the last few quarters in the consumer business? What is mainly to gain market share?
So I can't speak about the intentions of the competitors. I think what it was in all consumer business, I think competition is quite significant, but also I think we all recall Q2, Q3, the whole consumer sentiment was also a bit sort of tight. So price competition intensified across categories, including in the tea category. And with tea prices which had been broadly stable, I think allowed the room for that sort of price cut.
We have a follow-up from Ruchi. What do you expect do you expect prices to stabilize now?
It should, given that the tea market prices have gone up. I see it will be challenging for anybody to be reducing prices in this sort of current environment of tea market prices. Any other question?
Yeah, one more coming from Rashid.
Sure.
Another one from Rashid on the consumer tea business. How big is the unbranded tea segment?
So broadly, we believe it's at about 35% to 40% is where we believe unbranded is, versus a 60-65% branded. Of course, between volume and value, more value share for the branded, and probably volume is still higher in the branded, but a bit of a difference. Coming off a historical, we're talking about 70% to 80% unbranded. They're shifted over the last 15 plus years, and that's where large part of our growth has come from.
Okay, if that's all, I think it's time for us to wrap up. On behalf of Sunshine Holdings, I would like to thank each and every one of you who participated and engaged with us to get more clarity on the results and the business. So hope to see you guys next quarter. Have a good evening. Thank you.
Thank you.
Thanks, everyone. Have a good evening.